So in our understanding, we are saying when you are preparing trading account, you prepare cash book. When you are preparing receipts and payment account, you prepare, when you are preparing non-trading organization, you prepare receipts and payment account. So have this in mind. Instead of preparing cash book, you are preparing receipts and payment account. So receipts and payment account is equivalent to cash book. But the difference is non-trading organization, you receipts and payment account. In the trading organization, you prepare cash book. So that's the difference. But all are the same books. Provide information necessary in the formation of income and balance sheet. So we are saying all information that you get from the receipts and payment account are normally used in the preparation of income and expenditure account and the balance sheet. So this book is very important. The book is critical in its preparation. Any question as far as receipts and payment account is concerned? Any question? Now, the next one is the income and expenditure account, which is our next book. Income and expenditure account. Now, what is income and expenditure account? And what are the features of income and expenditure account? Now, when you talk about income and expenditure account, it is a type of account which is prepared to show all incomes and expenditure in the non-trading organization over a given period of time. So income and expenditure account will always give us the account of all receipts and payment in a business over a given period of time. So when you're preparing receipts and payment account, the balance will always be in terms of surplus and deficit. So when you are balancing the account as far as income and expenditure account, your balances always come in the form of 1, deficit, and 2, surplus. So we'll look at what point are you experiencing surplus and at what point are you experiencing deficits in a business. Now, what are the features of income and expenditure account? Number 1, it is a nominal account. Now, what do you mean by nominal account? So we go back and reflect on what we learned on our previous session when we were talking about the types of account. So income and expenditure account is one of the nominal account. So what do you mean by nominal account? George? Joseph? What is nominal account? So Catherine has given the answer and is saying it's an account which records both revenue and expenses. So all accounts which are supposed to be recording revenue and expenses in a business is what we call nominal account. That is very correct. So it is correct. Both Catherine, Ivan, and George, you have given the right answer. Now, number 2, it records only items of revenue nature. So when you talk about income and expenditure account, in other words, we normally say income and expenditure account is an accrual account. Accrual in the sense that you only record items of revenue nature. only items of revenue nature are recorded in the income and expenditure account. So any other transaction which is out of income and expenditure account will not find its place in the income and expenditure account. Number 3, it records only the present transaction. So meaning that in the income and expenditure account, we are not supposed to record all the previous transaction, neither the future transaction. We are only monitoring and focus on the current transaction, the present transaction. So all transaction which is happening in a particular financial period are supposed to be recorded in the income and expenditure account. All items of expenditure nature or capital nature are not supposed to be recorded in the income and expenditure account. Number 4, it is prepared in lieu of profit and loss account. Now we are saying when you are preparing non-trading organization account, always have this in mind. Instead of preparing profit and loss account, you're preparing income and expenditure account. So meaning that when you are dealing with trading account, you're preparing profit and loss account. But when you're dealing with a non-trading organization, your focus will be on receipts and payment, no, income and expenditure account. I hope that point is clear. Number 5, it has no opening but has a closing balance which is either surplus or deficit. So anytime you're preparing income and expenditure account, it has a closing balance. There is no opening balance. Now, what do you mean by closing balance? Now, the closing balance will always be in the form of surplus or deficit. How do you get the surplus? Surplus takes place when the income is more than when the is more than expenses, we say you are getting surplus. How do you get the deficit? Deficits will always occur when the expenses exceed income. So in time of expenses exceeding deficits, expenses exceeding income, that is the point at which we are getting deficits. So these are the critical features of income and expenditure account. Any question? Any question? Now, I don't know if you can look at this. I wanted to bring the format. The format of receipts and payment account. Are we there? Can you see this other board? Share notes. Are you seeing the share notes from the group? Share notes. Can somebody respond? Solomon.